I'm selling my house. Am I going to owe any tax? What's the gain? How does it work? We know that there are two big things that seem a little confusing, but I'm going to talk to you about Sandy and Pat. Also, in the link, you will be able to go and get this worksheet. Okay, so you're going to be able to follow along, make notes on it. And with that being said, it might be easier for you to comprehend it. So if you want to hit pause, grab that, make some notes. So here we go. How do we figure out the gain? And then secondary, how do we figure out how much of it's taxable? You want to remember four different things, and I think it's going to be really easy for you to remember. The first two are dollar amounts. And when we're talking about to sell a home, you need to remember 250,000 and remember 500,000. Okay? The other two things I just need you to remember is that there is 2 years, okay, of the last 5 years. So what are you remembering? 2 and 5. 250 and 500,000. So if you will just look at it this way, a single individual, that just means they're filing a return and they're the only name on it as the filer, whether it's single, head of household, or married filing separately. It's 250,000, okay, per person. Well, married filing jointly, that means there's 2 people on the tax return. Can't be more than 2 people. So if you got 2 people filing, married filing jointly, then that's why it's 500,000. What that means is, now hear this, if the gain is less than that, okay, and they lived in it at least 2 of the last 5 years as their primary residence, then the gain is not taxable. This does not mean, okay, that if the sales price is less than 250 or less than 500, it means the gain. So how do you determine the gain? Now I'm going to tell you this. You take one number and every other number you subtract from it. Easy enough. What's the one number that you're going to put as a positive that is the top of your equation? So remember when you do math, there's always a number at the top. So what is your top number that is a positive number? It's always going to be this selling price right here. So we have a selling price here of $975,000. So 975,000, okay? That's the selling price, okay? And with this, all these numbers, all these other numbers that qualify, which we're going to talk about which ones do, I'm going to subtract it from that, and then I'm going to know what my gain is, or maybe a loss. That's simple. So all you got to remember is the selling price minus everything else. Well, minus what? Well, they bought this, okay? So I'm going to use a green pen here. So they bought this house for $750,000. So we would subtract $750,000. Now remember I told you to get that worksheet. So if you're like, well, I can't read that. Well, you got a worksheet. They had closing cost when they bought it of $2,000. Okay? Now, if you're a realtor and you're like, well, there would have been more than 2,000, don't get caught up in that. All I'm saying is closing cost when they bought it. It's a subtraction. There were improvements while they lived in it. What's an improvement? An improvement is I did something and I didn't need to. It's not a repair. It is, well, I decided to put better windows on. I decided to put a pool in. My point is an improvement is I increased the value of that property. I didn't need to repair something. So an improvement, now this is improvements during. So I'm going to subtract it, $48,000. And now we had repairs while they owned it. Okay, so they bought it in 15, they sold it in 25, they've been there 10 years. They tracked all their repairs. Well, that does not count, okay? Repairs during ownership do not count. So we don't get to subtract it. That's the only thing basically. So utilities don't count, insurance doesn't count during ownership. Costs to just own it, run it, etc., repair it, mow it, those costs aren't going to count at all in this equation. But they sold it for $975,000. Well, that's our top number. Now they're selling costs, okay? Selling costs. Pick whatever you want to call that, 70,000. And you don't have to get too confused on this because it's kind of like when they have decided, hey, I'm going to sell whatever costs they're incurring because they need to sell it and now they got to pay for this. And oh, they got to pay for that. And then, oh, this need to be done. So selling costs, right? Commissions, etc. Closing costs, that could be different than selling costs. Just pick it. You don't have to even get confused on this because it's real simple. If you have a property and you're selling it and there are any costs related to this, you don't have to say, well, what about this? And what about this? And what about an appraisal? And what about an inspection? Well, was it something that the seller paid? Yes. Did they only pay it because they're selling the property? Yes. Well, then it counts, okay? So we have selling and closing costs. But let's say that they needed to make $4,000 in repairs, but to sell it, meaning they said, oh, I didn't know that I had to repair that. And the person who's buying the property says, well, I'm not going to buy it unless you repair that. So the only reason they did the repair was to sell it, okay? So then those repairs would count. So we get to subtract $4,000. But isn't that really easy? In terms of, well, what is my gain here? So I sold it for $975. I bought it for $750. I had $2,000 in closing costs when I bought it, $48,000 in improvements while I owned it. I have $70,000 in selling costs, $10,000 in closing costs to sell it, $4,000 in repairs. And with that, I'm actually looking right now quickly at my worksheet. We then have total costs of $800, okay, and $84,000. $884,000 is all of this, okay? That's all of our subtractions. So now, go ahead and get a black pen here for you. If I take all of these subtractions, the 884,000, okay, and I subtract it from 975,000, then I'm looking at a gain of $91,000, okay? Now, the first thing we're going to note here is that $91,000 is less than $500,000. Sandy and Pat, married filing jointly, they're going to file that joint return. That means that if the gain's less than $500,000, it's not taxable. But there's one more thing we got to figure out, right? The 2 years of the last 5 years. So that's why I went ahead and told you Sandy and Pat, see, they bought this on 7/18 of 2015, right? And I got this spelled out in that worksheet. Now, they've sold it on 8/21 of 25. So the first thing, just real simple. How long did they own this thing? Well, they've owned this thing for 10 years and 1 month. But see, it's not how long, quote unquote, you own it that you really have to worry about. What you have to worry about is the first part here, which is 2 years. Have they lived in it as a primary residence for at least 2 years? If the answer is yes, then half of the way home to tax-free is there. But when you then say, of the last 5, this is the part that it's easy to get confused, I get it. But all you do is you say, okay, have they lived in it at least 2 years as their primary residence? And you go, yes. Okay, but was that 2 years any time in the last 5 years? Yeah. So I even have an example in there where somebody only owned it for a little over 3 years, but during that 3 years, okay, they used it at least 2 of those years as their primary residence. So they meet all of the qualifications. So they meet the exclusion. And that means that because 2 of the last 5 years it's been their primary residence, that gain of 91,000 is less than 500,000. That means that they owe 0 tax. Now, you're probably asking right now, well, hey, wait a second here. What if it's a loss? Well, it's not deductible. It's just a loss. Okay. That would mean maybe they sold it for 575,000 with still all of these facts and circumstances. Let's say you go, oh, well, how about JJ? They sold it on 8/21, but what if they only bought it a year ago? Well, can't run through every scenario, so I am giving you a link in the body of this video, and the best source for anything related to this is actually the IRS website, and they have it all spelled out, all these exceptions. What you can do is that worksheet that I just gave you, okay? Well, you can use it now for yourself, okay? Because I've given you a blank one, okay, out of the kindness of my heart. And you can work the numbers. Stay tuned to other videos, and as we move along, we'll always be talking about Sandy and Pat. You made it to here and you're not a subscriber? What are you doing? Do me a favor, subscribe. Thanks for tuning in. Check out all these other resources here to help you.